Will the Western powers also be subdued? With strategic alliances and innovative production strategies, BRICS and Saudi Arabia are not just participants in the oil game, but they're rewriting the rules. As the world watches, these powerhouse players are challenging the long-standing dominance of Western oil giants, carving a new path toward energy independence and economic strength. In this video, we will discuss how the end of petrodollar agreement and de-dollarization by Saudi Arabia and the BRICS could impact the US economy and dollar valuation. Saudi Arabia just changed the entire future of the US dollar when it decided to end its 50-year agreement with the US and the petrodollar. Saudi Arabia is now looking to BRICS and China for their future in this new multipolar world. What happens next for the US dollar and BRICS? As countries from the BRICS group and regions including the Middle East and Asia increase the use of local currencies for cross-border payments, there is a growing perception that the dollar's importance in international finance is ebbing, particularly in global oil markets and the use of the petrodollar. What exactly is the petrodollar? In the early 1970s, during a period of economic instability in the United States, after President Richard Nixon ended the gold standard in 1971, which previously tied the value of the US dollar to gold, the country faced rising inflation and deficits. In response to these economic pressures, the US sought a new method to stabilize its economy and currency. In 1973, US Secretary of State Henry Kissinger brokered a strategic deal with Saudi Arabia. Under this agreement, Saudi Arabia would sell its oil exclusively in US dollars in exchange for US military protection and access to advanced weaponry. In short, it's a commitment by Saudi Arabia to use dollar revenues from oil sales to the United States to buy US treasuries. China has become Saudi Arabia's largest oil customer, accounting for more than 20% of the kingdom's oil exports. Beijing has established close trade-driven relationships throughout the Middle East, where US influence has waned. A fully fledged currency needs to fulfill three functions: denomination, a means of payment, and storage of value. Anything short of these is not a currency, and the petroyuan is struggling to meet these requirements. Well, everything is changing quickly for the US dollar, and we've seen two major events that are going to completely change the future of our world. The first event is the announcement of a new BRICS payment system that will in fact challenge the status of the US dollar in international transactions. But what's even bigger is the shocking announcement that after a 50-year run, the agreement between the United States and Saudi Arabia to export oil exclusively in US dollars has officially ended on June 9, 2024. And guess what? The Crown Prince of Saudi Arabia has decided to not renew its partnership with the US, and instead will open up the Saudis' lucrative oil trade to other countries and currencies. This is a massive blow to the status of the US dollar as the world's reserve currency for the past 50 years. The US government has mandated that oil must be sold exclusively in US dollars, elevating the dollar's status as the world's reserve currency. It was honestly one of the most lucrative decisions the US government has ever made. But a world in which America is the sole superpower is officially over. Earlier this week, Reuters reported that Saudi Arabia has now joined a China central bank digital currency project, and what could be another step towards less of the world. Oil trade being done in US dollars last week. Congressman Thomas gave one of the most authentic breakdowns of what's happening with the US dollar. Saudi Arabia's willingness to diversify the currencies used in selling its oil aligns with a larger strategy that has required the county to increase its international relations beyond the United States and Europe. But now the kingdom's willingness to join the BRICS club of emerging nations and partner with China and other countries in the mBridge project to explore the use of their respective central bank digital currencies, CBDCs, for cross-border payments seems like a great effort to end petrodollar. But the point is that the US economy may face increased volatility without the consistent demand for its currency provided by the petrodollar system. This instability could result in significant fluctuations in exchange rates and financial markets. Affecting overall economic stability, the previous stability afforded by the petrodollar system helped to smooth international trade transactions and provided a reliable market for US debt. Without it, the US could experience more economic shocks and less predictable financial conditions. With a decreased global demand for the dollar, inflation rates in the US are likely to rise. The Federal Reserve may need to increase interest rates to combat this inflation, which would make borrowing more expensive for both consumers and businesses. This scenario mirrors past instances where reduced confidence in the dollar led to inflationary pressures and higher interest rates to maintain economic balance. Higher interest rates resulting from the need to control inflation will lead to increased costs for various types of borrowing, including mortgages, auto loans, student loans, and credit cards. As the cost of borrowing rises, consumer spending and economic growth are expected to slow down. This increased cost of debt can lead to reduced investment by businesses and lower consumer confidence. Furthermore, dampening economic activity, the US might face significant challenges in financing its national deficit without the support of the petrodollar system. Higher interest rates will increase the cost of servicing. The national debt puts additional pressure on the federal budget. This could lead to larger budget deficits and potentially necessitate cuts in government spending or increases in taxes to balance the budget. A reduced global demand for the dollar could lead to its depreciation. A weaker dollar would make imports more expensive, affecting the purchasing power of American consumers and potentially leading to higher prices for goods and services. This depreciation could also affect the US's ability to maintain its standard of living and economic influence globally. The decreased value of the dollar might also reduce the attractiveness of US financial assets, leading to lower investment inflows. By examining the implications of losing petrodollar status, it becomes clear that this transition could have profound and wide-ranging impacts on the US economy, affecting everything from inflation and borrowing costs to national financial stability and international economic influence. The BRICS countries are actively working to decrease their reliance on the US dollar. This strategic shift includes exploring alternative currencies and financial systems for international trade. For example, India recently made a historic purchase of 1 million barrels of oil from the UAE using rupees instead of US dollars. Additionally, Russia has conducted significant trade with India in local currencies, including a $4 billion arms deal paid in rupees, decline in the US dollar as the world's reserve currency. The shift by BRICS countries away from the US dollar is contributing to its decline as the dominant global reserve currency. This trend is accelerated by the expansion of the BRICS alliance to include new members such as Saudi Arabia, UAE, Egypt, Iran, Argentina, and Ethiopia. Starting in 2024, the movement towards local currencies in international trade poses a challenge to US financial hegemony and has the potential to reshape the global economic landscape. US responses raising interest rates. In response to the declining dominance of the US dollar, the US might raise its federal fund rate to attract more foreign investment and maintain demand for the dollar. However, this strategy has inherent risks. Higher interest rates could potentially slow interest rates, domestic economic growth, and lead to financial instability. Balancing these factors will be crucial for the US to maintain its economic position. This shift in global trade dynamics underscores the evolving nature of international finance and the growing influence of the BRICS alliance. The diversification of currencies and global transactions highlights a significant transition away from the traditional dollar-dominated financial system. If you enjoy our content, please hit the like button and leave your thoughts and feedback in the comments, as your engagement helps us grow. Thanks for watching.